Well, welcome to today's Fireside Chat with BTCS. I'm your host, John Roy, and I cover technology here at Water Tower Research. Today I'm joined by Charles Allen. He's the CEO of BTCS. I should mention that the company has its safe harbor statements, and those can be found on their website. Also, this Fireside Chat may not be reproduced or a written transcript distributed without the express written consent of Water Tower Research. Charles, how you doing?
Good, John. How are you?
I'm doing good, doing good. So, for people who don't know BTCS, maybe a quick overview of what you do and where you are in your growth process.
Sure. So we're an Ethereum first blockchain technology company. Really, what that means is we're focused on generating highly scalable revenue within the Ethereum ecosystem. And Ethereum is the number two blockchain, and it's unlike Bitcoin. It's a smart contract based blockchain where you can build solutions on top of it. So if you've heard of stable coins, NFTs, tokenized assets, tokenized securities, all of these things, the majority of them are getting built on Ethereum. So we're a company building a business within that ecosystem and economy.
Right, and you wouldn't use Bitcoin for that at all, would you?
No, we don't own any Bitcoin. We have zero exposure to Bitcoin. While Bitcoin's great, it doesn't really do anything. It's not, it's just a store of value. So our focus is really not just being a company that you get exposure to holding Ethereum, right? Which you could go do that in an ETF. It's getting an operating company that's generating outsized revenue from operations, in addition to having exposure or leverage exposure to Ethereum. So it's kind of a more complex um, way to get exposure to the blockchain ecosystem.
Excellent. Well, speaking of revenue, I know you guys positively pre-announced the 2025 revenue numbers. Maybe you could give us some key takeaways. I mean, uh, what was it, up over 250%, 290% year on year? It was a big number.
Yeah, so we did obviously unaudited preliminary revenue of 16 million for the year, which is about 6.6 million for the fourth quarter, up about 290%. So just in an overall great year. I would say the first quarter is we historically, I'm not exactly sure why it's usually been a down quarter. Obviously there's not seasonality like the holiday shopping, but we have seen that in the past. So that is it's nice to see. Usually the back end of the year tends to be better, at least based on the last 2 years. But yeah, it was a great quarter, right? We the year over year the assets grew by 600%. So we have over 70,000 ETH valued at close to 225 million. So it's been even with the price of Ethereum coming down from the 4,000 range into the low threes, it's still been a very strong year for us.
Excellent. Um, so I know MSCI had made some possible moves about including or excluding DATs from the indices. I think they came up with an updated announcement fairly recently. Maybe this could give us a little more color on that and your views.
Yeah, so actually, funny enough, my brother worked at MSCI for 20 years, so I was able to connect with some, the senior people in charge of running the whole evaluation or consultation process on MSCI's behalf. So, if you haven't seen it, we put our submission to MSCI on our website I think it's under Thought Leadership Investor. It's under the investor section. And it seems they're very receptive to it. We're not the only company or investors, and they tend to listen more to the investors that kind of brought up to them the fact that they're kind of throwing the baby out with the bathwater. And the point we made was there's a big difference between a company that just goes and buys, let's say, Bitcoin or Ethereum or Solana or some other digital asset and holds it on its balance sheet, and it has no operations, and that's what it does. That looks and smells like an ETF, and we'll see how things go, but they may look at that and say, well, we're going to exclude those. The argument we made is, well, there's a whole digital economy here where there's a lot of business lines that you can build where you need to hold a digital asset on your balance sheet, and it's not we're buying and hoping it goes up, but it's core to the operations, right? It's the argument I made is if you make airplane parts and you need a bunch of CNC machines to manufacture those parts, if the price of CNC machines is highly volatile and there's a, they were exchangeable readily, um, it wouldn't make you an ETF holding CNC machines. It would make, it would be a commodity. You would be an aircraft parts producer that needs to hold that machine to manufacture something. So I think they were very receptive to that, which is good. And I think they're going to go back to the drawing board and hopefully come up with some additional metrics, which is basically what we proposed. We said, hey, why don't you have a revenue as a percentage of assets whole as a metric? Why don't we gave them like 5 or 6 metrics they could look at to kind of determine, is this company, a quasi ETF that they may want to exclude? And even if they should do that, I don't know. I mean, that's kind of a micro strategy. That's basically what they do. They've sliced and diced their cap table into preferred and converts and say that's a product. But we'll see how receptive they are. I think there was a decent amount of pushback that, it was kind of a big win that they're going to at least reconsider. And hopefully, at least, at a minimum, I'd like to get our name off their list. Um, I don't want to be on, was it Santa's naughty list? Uh, if you're included in ETFs, you get, or indices, excuse me, there's a lot more buying power that can come behind your stock. And so we'd like to, at a minimum, get ourselves excluded from the naughty list. And, to the extent we can help get the whole industry excluded, that'd be great as well. But I think, our core focus is our shareholders and making sure we're not excluded.
Right. Yeah. So you got to hold this asset to make the whole system work, and the system is bigger than just holding the asset.
Exactly. Exactly.
Right. So, um, speaking of DATs and DAT plus plus, what have you seen as the kind of the latest things that are happening beyond, what you were doing? Maybe it might be a good idea to give us a quick overview of the pieces that you have today and where those might be changing in the future.
Yeah, so right now we have 3 business lines. The first is under node ops, which is basically staking, and that's, I think, something most investors are familiar with, where you deploy your crypto onto a node and then you run it. We actually do that ourselves, so we don't use a third party. We don't pay a fee, and then we also stake via Rocket Pool, so that's a liquid staking provider. So that increases our rewards by 30 to 40%, and that falls all under node ops. That's the first business line. That tends to be high margin, but capital intensive, not like you're buying a machine like a Bitcoin mining where it's a depreciating asset, but you have to have more ETH to do that. The second is block building, which is very low margin business, and we're hoping to grow that. That's been the major driver of our revenue in 2025. And that is basically buying block space from validators, kind of like it's almost like buying order flow and then filling it with higher margin transactions. And so that's been the revenue growth engine of 2025. And then the third business model is Imperium, which is basically more actively participating in the Ethereum ecosystem. So that could be a liquidity provider and deploying other, proprietary um, tactics within that market. And to the extent we can, we would connect those or integrate with the builder and validator models as well. Right now, we're being relatively, vague around what we're doing, apart from, being a liquidity provider, and some of the other strategies. It's not something that's patentable. It's really just your intellectual property is your know-how. And so, as far as 2026, I think that's where our main focus is, and it has been for about the last 6 months. We see that as having the potential to have high revenue growth as well as being very high margin. I can't put any numbers to that, but that's where the core focus of the company now is. We've basically gotten node ops, to a point where it's an institutional grade operations. It's just more capital would need to be put in. The block building, that's a very dynamic market. Q1 is usually a weaker time for that. And Imperium is really where we see us providing tremendous shareholder value in the future, provided we can be successful in that business. And so we've all put this all out publicly. But 2026 should really be the year of deployment for that, with it coming, in probably Q2, maybe a little bit in Q2 and Q3. So that would be um, where we really see the growth of the company.
And are you expecting, or do we see any more legislation on the horizon out of the US?
We do. So we have the Clarity Act, which is currently working its way through the regulatory or legislative process. I think that's getting close. I would hope in the next, weeks, months, we'll see that we'll get color. I think right now there was some pushback from Coinbase on the ability to offer yields on stable coins, which is kind of interesting because I thought that was kind of taken care of in the Genius Act, which talked about stable coins. So there's a little bit of a push and pull, and the banks are worried about really competition. I think that's what it is you have the larger banking institutions saying, hey, don't let these people into our sandbox. We're making, we don't want to lose our margin, or we don't want to have a new competitor with a better technology. So we'll see. Hopefully, I'd love to see positive legislation come out on that in the coming quarter. So, and either way, the things that are Coinbase is fighting for don't really affect us. I think we, as an infrastructure, um, at the infrastructure layer where we're kind of operating, it doesn't really matter to us as a business. So we're not. I mean, I think it would be better to have competitive markets. So I think they should be able to pay interest, but it wouldn't if that's the sticking point, but everything else goes through, it would still be it shouldn't affect our business and have an impact there.
Right. Speaking of your business, I hear people talking about, institutions are starting to get a lot more active or preparing to become a lot more active. Are you seeing that sort of thing going on right now?
I think so. I think it's really been an interesting, year, right? 2025. And I think the big change is we had the regulatory environment dramatically changed. And so since then, we've seen it's not like you flip a switch and say, hey, we're going to have tokenized real world assets built on Ethereum. It's all going to happen overnight. We still don't have full regulatory clarity. We've got the Genius Act. We don't have the Clarity Act. So when that comes through, I think that could be a pop to the market in terms of prices, but it'll also, um, I think, speed up institutional players coming in and building solutions. I think like Robinhood's building a layer one, excuse me, a layer two blockchain on top of Ethereum, which is great. I mean, we're at the L1 level, so we'll benefit from that. Ethereum will benefit from that. And it's great to see institutional players come in. And really, I think the tokenization of real world assets is where um, the economy of the future is going, right? Where you can move any asset globally 24/7 without an intermediary taking a massive fee or slice of the pie to provide trading and settlement.
Yeah, I hear people talking about, as you tokenize, yes, things are going to get more efficient, but just being more efficient is really not going to make people necessarily change. What you really want, of course, is more features, more functions, more revenue sources, and that's kind of a lot of the further out thinking, which I think is bodes well longer term.
Yeah, and it also depends. I think it really depends on the industry you're looking at. So in real estate, it's a very inefficient market, right? If you ever bought a house, I think the closing process, the title insurance, like that one is a real no-brainer from an efficiency standpoint. If you look at the securities market, I don't think we have an efficiency problem. We have a I'd say a Wall Street problem where you can have naked shorting, and the rules for making up fake shares is like it's almost impossible to monitor. Everything's done on computers with front running by high frequency traders, and so that market could dramatically get fixed. That's not an efficiency. That's just what I would view as fixing a broken system. But there's all sorts of things. There's new business models that could come out, right? Like you could have like NFTs. I don't really like it because it's a small market, but if you tokenize concert tickets, a venue um, could sell a ticket and get a commission every time there's a resale, and you don't need a StubHub. So there's like endless models that can be built within a digital economy, and that's kind of why we don't want to be betting a single play. We want to be at that L1 layer, um, building a business there because it's much less risky in terms of will this tokenization platform work or not? Like, well, I don't really care if it's on Ethereum, we benefit. So I think that's coming back to your question of where we're going in the future it is one of tokenization. And for each industry, it will depend on what problem are we solving? Are we solving um, efficiency? Are we fixing a broken market? Are we creating a new market? Are we expanding current markets? And I think that's, time will tell on which players adopt which solutions. Um,
Right. Well, speaking of, what you guys are doing, if you were to characterize how BTCS is different from the other Ethereum players, what would be kind of the, key three items that you see or that would differentiate you guys?
I think one would be we have operations. Two would be we have public markets experience, and we're very strategic on the capital raising. So I think that's kind of, Pubco experience. I put all of that in that bucket. Um, and then I think three is we have a plan. And I think that's, when you look at, if I dive deeper into those three things, one, we have an operating business within the Ethereum ecosystem that we've been working on for 5 years. So we didn't pivot in. We weren't a biotech company that pivoted in and is now like, well, we're trading at a discount to NAV. What do we do? Let's go find a business. Let's go find something to do. Um, and so that we don't fall into that bucket, which is great. A lot of investors sort of throw us in that bucket, like we should just trade at NAV. In terms of public market experience, I mean, without naming names, I've seen a lot of peers rely on really bad convertible debt deals and other deals, some of them repaying them at huge losses. We've been very strategic on our capital raising, using our ATM, using above market convertible notes to a very small degree, and then using DeFi. I think we're one of the only ones doing that. And so I think that just comes from, I was an investment banker for 10 years. I've been running BTCS for 10 years. And as a largest shareholder, I just, I want to create value for our shareholders by having the stock go up, and you can't do that if you do a bad deal. Uh,
Right.
and then, the third, we have a plan. Many of the DATs now, and I speak to a lot of the CEOs, are looking at M&A. They're looking at trying to figure out how to come up with an operating business, and that's kind of harder said than done, and it's going to take time, right? Because most of them don't have the staff to do that, so they need to go out and basically build a company from scratch after they
Right.
come up with the plan.
Well, I'm running a little bit later on time. Maybe one final question in terms of the outlook for 2026. I know you talked about it a little bit. Maybe you could give us a final view as to how you see things progressing over the next couple of years.
Well, I think, if I had to sum that up, I would break it down to kind of macroeconomic and industry factors, and then company specific. So I think on the macro side, I remain very bullish on blockchain technology, specifically Ethereum. I think we're going to get the Clarity Act. I can't really say for, geopolitical issues that could affect the stock market, our market, like who knows, right? That's a wild card. As far as moving down to company specific, as we shift to focus on Imperium, hopefully that'll bear fruit in 2026. But that is a big focus. We've kind of figured out staking or node ops. We've on the builder side, that's going okay, but that, Q1 is typically a weaker quarter, and it's a competitive market. And so if we can supplement that with a higher margin business, that would be amazing for 2026.
Well, Charles, I appreciate your time extensively for today, and hopefully, we'll talk to you again soon.
All right. Thank you so much for the time.
To learn more about BTCS, you can certainly visit their website, or you can access our research at www.watertowerresearch.com, where we talk about BTCS. I want to thank everyone for joining us today. The views expressed in this fireside chat may not necessarily reflect the views of Water Tower Research LLC and are provided for informational purposes only. This fireside chat may not be distributed or reproduced without the written consent of Water Tower Research and should not be considered research nor recommendation. WTR is an investor engagement firm, not a licensed broker, broker-dealer, market maker, investment banker, underwriter, or investment advisor. Additional disclaimers can be found at watertowerresearch.com.